So good morning, everybody. This is Jeff Wade at Crypto World. I am the founder of Crypto World. So we do crypto over coffee every Tuesday morning. And normally we have this event so like-minded individuals can come to the store and just network and talk about different things, ask questions. But also we have guest speakers that come on this show, or I wouldn't say show, but come on to our live stream and just talk about some of the projects they're doing, how they're making an impact in the industry. But this morning we have Kevin Murcko, and he is the CEO of CoinMetro. So Kevin, thanks for being on. I don't know what time is it? You're in Mexico, you said?
Yeah. Unfortunately, my laptop still has Estonian time, so it says 5:31 in the evening. That's obviously not correct. Right. I think we're shooting. I think it's about 9:30 a.m. basically. So we're probably either on the same time.
Central time. Oh, nice. Okay.
Actually, this Quintana Roo, the state where I'm currently in, doesn't do daylight savings. So during the summer, we're an hour back from Eastern Daylight Time. We're actually Eastern Standard Time. All months of the year, and then during the winter, it's the same time as the Eastern. So right now, we're officially on Central Time.
Okay.
Essentially.
So we don't feel too bad then, because we've had people call in from like Hong Kong and all over, like I think Korea or some other places, and it was 12 or 1 o'clock in the morning where they were at while they were calling in and doing a video chat. But thanks for being on and talking about CoinMetro. I know we've had conversations before. Tom, one of the guys on your team, lives here in St. Louis. But we're looking to work with CoinMetro to be able to utilize their exchange for onboarding new customers. But Kevin, can you just talk a little bit about, CoinMetro? How long have you guys been around, and just a little bit of background about yourself?
Sure. I'll start with the personal background because it probably adds a bit of color to the rest of the story. So, myself, I've been involved in traditional finance, mainly through foreign exchange, so FX. I had a FX brokerage for about a decade, a regulated one. Before that, I had traded on prop desks. So prop trading essentially means somebody gives you money and you trade it for them. That's essentially what that means. And dealing with client relationships across multiple other regulated brokerages. And that led me to open my own brokerage in 2009. And I ran that brokerage as CEO and the founder until roughly 2017 full time, when I came into crypto full time. And that venture into crypto was CoinMetro. Personally, I started mining Bitcoin in 2009 on an iMac in the corner of my office. I was living in Cabo San Lucas on the west coast of Mexico at the time. Somebody MMS'd me. So for everybody in the room older than, 25, I got an MMS, and I think I had if I remember correctly, even what the phone was. I think it was an old. I had 2 or 3 phones. One I used for business, I had a personal one. I think it was like an old Nokia, and I got an MMS from a friend of mine that said you should read this, and sent me the Bitcoin white paper over 9 SMS messages, like 1 page each message. And so I read it, and to be honest, I didn't think about currency. I didn't think about necessarily, store of value or anything like that. What triggered me was antiquated markets and the inability to move value across borders. Because I had been involved in a few kind of IPOs in different countries and trying to get investors to be able to buy on a market, whether it be a small market or even a major stock market across borders between countries, was ridiculously hard. Came with like 15 counterparties, lots of risk, lots of cost. And I thought, wow, this could really change the world in terms of, movement of value cross border. And so I started mining it. I mined a ton of Bitcoin on that iMac. Comparatively speaking, well, in today's prices, a ton. In those days, nothing cents, but definitely a ton. And so personally, I'd already been involved in crypto for quite some time. In 2014 or so, I had clients of my FX brokerage that were actively asking me to trade Bitcoin. And so my journey began to try and find liquidity for Bitcoin for what's called an STP, or straight through processing brokerage. What that essentially means is we're not a market maker. So we weren't taking on risk. We would simply take the client order, find a matching counterparty, and execute the trade. Simple as that. And so there were two exchanges that provided APIs at the time: Bitstamp out of Europe and Huobi out of China. And we tested both of them in 2014. And without going into the technical details, impossible. So essentially, between one price tick and the next, we measured a few things. One is the variation in price between ticks. So every time a price changes, what the variation is. And then other things about latency and other things that are important for trading. And they failed all metrics. So there was no way for us to offer it. So at that point, I thought, well, there has to be someone out there to offer institutional access to Bitcoin liquidity. There has to be, or this market will never succeed. It's never going to succeed just on random people on the internet, buying pizzas for 10,000 Bitcoin. That's just not going to be how this thing progresses. So there's got to be somebody out there already doing it. And if there isn't, maybe I should do it. And there wasn't anybody doing it. And so the first this wasn't CoinMetro, but my first inclination from a professional standpoint was aggregation of liquidity for institutions. That was the idea. And the thing is as I started getting closer to CoinMetro's launch date, which was 2017, or when I did our ICO, actually, I realized that in crypto, even though there was a ton of exchanges, I would say everyone is still, for the most part, under exchange, just like you're underbanked. What does that mean? You might not be non-banked, like you have a bank account, but the service sucks. You hate it. You hate calling them. You can't stand when you have to interact with them. They charge you money for things they shouldn't. It was sometimes, when I've worked with banks and other financial institutions where I have a charge I don't remember on my credit card or something. An overdraft fee they shouldn't have charged me, and I know they shouldn't have charged me, and I know I'll probably get it back. But the thought of having to talk to them for 4 hours, I just don't call. That's the state of finance. Yeah, and I've always been this retail advocate. So my FX brokerage and now into CoinMetro, trying to change that, trying to give the same level of service that the guy with 7 zeros or 8 zeros on his bank account gets versus the guy that has 1 zero. And I don't really see a reason why that can't be possible. I understand why businesses don't do it, but there's no reason why it can't be possible. So that was the foundation of the FX brokerage. It's the foundation of CoinMetro. So I quickly started to think, well, you know what? I have all this experience in retail. I understand the retail client. I was one. I know what they want. I know what they need. And no one is really servicing that need. And so on the back of that, I launched CoinMetro. And our main focus really, aside from the services we offer, is just access, and I think a level of just commonality between all of our clients. And what that means is access is kind of a small word, but it means a lot of big things. So that means transparency. That means kind of telling people the truth, even when it's not that nice. Education. It means getting access to opportunities that you may not understand how to get access to, or just don't know that exist. And it means that us as a business, we don't actively try and make money on the backs of our clients. So we align those incentives. So when our clients make money, we make money. If the client isn't making money, they will leave, right? So at the end of the day, our goal is to make sure that, we put the client first. And that, again, that sounds like a little thing. And that can be as small as, 24/7 support in your language from someone who actually knows what they're talking about. And not having to wait 3 months to get a reply, and not having to wait 3 months and get a macro reply, like a standard reply that doesn't even answer your question. And so, trying to change even those small things, I think at the end of the day is something very big. And that's kind of the foundation of CoinMetro. So we've built from there our exchange platforms and our margin platforms where you can trade on basically credit, and our passive income platform where you can earn money like in things like staking and lending and borrowing. Make a comment there that we didn't lose any money with 3 Arrows. We had no money with Celsius. We're pretty diligent on what we do here. And a lot of that comes from not just my experience, but many other people on the team's experience in traditional finance, whether it be from the regulatory side, the government side, the legislative side, or just the business side. And so even with our listings, we are known as kind of the gem exchange, because we do a lot of research when we do listings. We don't charge for listing fees. We don't take, as someone famously said one time, donations for listings. We do due diligence, and we basically act like a hedge fund. If we wouldn't invest in it, we don't list it. And that has meant that through even right now during this current kind of bearish market that we're sitting in, the assets that we listed 2, 3 years ago are still in profit. And that's simply because we like I said, we do a lot of research. So you don't have to. It can be overwhelming when you're new to this and you come to a platform that has 5,000 listings. Like, where do you start? And then people tell you, do your own research. And then the question for that is how, like where, you know? So yeah, that's CoinMetro in a nutshell.
Yeah, that's great. As far as in CoinMetro, can you guys onboard customers in the U.S.? Or I know your company is based out of Estonia, and you're ramping up over in Mexico. I think you had talked earlier about opening another office out there. How does it look like for Americans utilizing your platform?
So we onboard clients in the U.S. from 47 states. 3 states we don't onboard from are New York State, Washington State, and Hawaii. Outside of that, we onboard clients from all other 47 states. So we have a registration with FinCEN as a foreign money service business, and we're actually actively now going out and getting specific state licenses. And so in reality, you know, the licensing regime in the U.S., for lack of better words, I guess, doesn't make any sense. Essentially, you acquire what's called money service business licensing when they do not classify crypto as money. So you're getting a license to service money when you're not servicing money. Now, on the other side of that, if you accept fiat, you become a money service business. But in some ways, you're also not a money service business. So what most companies do, especially and you can see this with a lot of bigger companies as well. We went with the FinCEN registration because it gives us a blanket federal coverage so that we can file, let's say, suspicious activity reports. For example, when someone gets defrauded, when someone's account gets overtaken, etc., we have the ability to file with the U.S. government at a federal level. You know, all of our policies internally are Bank Secrecy Act compliant. So we're compliant with all the statewide laws. But we chose to stick initially just with the federal route because essentially there's many states in the U.S. where actually licensing isn't even required. You get exemptions instead of licensing. There are other states that require licensing, and then there's states like New York that have their own specific type of license, the BIT license. So we're in the process of acquiring about 15 state licenses in the U.S. And over the course of the next 2 years or so, the hope is that federal licensing will come into play in the U.S. And this way we'll be able to just go after one license instead of the rest of the 35 or 34 state licenses. But yes, and the short answer to that question was we do onboard clients from the U.S. We also have instant access to fiat deposits from your bank account. So you can connect your bank account with us and via ACH make instantaneous US dollar deposits to your account. It takes about 5 days for those to clear in reality to us. But as a company, we give you access to those funds immediately.
Not like Coinbase. They wait up to 2 weeks sometimes to allow you to have access to them. So I know that's one of the biggest complaints we've had at the store here because, you know, a few customers have used Coinbase. And
I think most people use Coinbase. I mean, most people that come into the crypto world for the first time, or a crypto world, not the crypto, but the crypto world specifically, are going to end up at either Binance or Coinbase or Gemini. You know, probably Coinbase and Binance are kind of the gateway drug into crypto for most people. And so because they're the biggest, they're the kind of most known, their friends are going to tell them, you know, I don't know, go buy some Shiba Inu or some ridiculous token. And they're going to tell them, you know, Coinbase or Binance because those are the big boys. But I think what happens is exactly what you're explaining. And this is kind of where CoinMetro sits. People start at those venues because they're big, they spend a lot of money on advertising, and they're well known. Then they realize either they're too expensive, they're terrible at customer support, their on-ramps or whatever aren't the best. And when they do have a question, no one's there to answer it. And they end up looking for alternatives. And so we have a lot of ex-Coinbase, ex-Binance, ex-Huobi, ex-Gemini clients that come to us for those very specific reasons. Because they just want someone to deal with. If they have, you know, if you have every platform has issues. No business is perfect, right? Every business has problems. But when you have a problem and you're a client and there's someone that can actually answer it, you know, immediately, it's just a much different feeling than when there's a problem and, you know, you're just left in the wind, which is, you know, the commonality between most other businesses in this industry.
Yeah, I was just watching when I was in Dominican, I downloaded this show, and you might have heard about it. I forget the name of it, but it was about that Canadian exchange who the CEO supposedly died
in India.
And he had all the keys with him, I guess.
Amazing security.
Right. So do you believe he's actually dead, or do you think he did?
I think everybody loves a good conspiracy theory, especially when it fits so nicely. Either way, I'm not sure how much of a difference it makes. I kind of, before seeing I saw that documentary. So before seeing that documentary, I was like, yeah, he probably actually died. I mean, having been to, many third world countries and understanding kind of how the quote unquote system works, and that documentation, everything that's kind of run of the mill. I mean, I know at least, I don't know, 40 people, 50 people in Mexico that have like more than one birth certificate with different names on them. I mean, this is just how stuff, I would say, works, but in general, that's how stuff doesn't work in most of the world. And so, but when I saw the documentary obviously was probably paid for by a bunch of people who lost money in that hack. So they were looking for an answer to kind of prove the conspiracy. But when you watch that documentary, I got to say, they bring up a few points. For instance, that forum, Talk Gold. I knew that forum. In fact, and my start into like online investing was trying to find, well, I fell into these like high yield investment, basically Ponzi schemes, and lost a bunch of money. And then figured out, I literally had a system on how to invest. Well, I say invest, on how to gamble in those things. And I actually made money at the end. But I literally had a notebook where I took notes, and I had a formula of literally the amount of web pages that the thing had, the amount of hits it had, divided by, I mean, it was actually a mathematical formula to figure out which ones would last the longest. And the funny thing is one of the guys they mentioned on that, the guy that ran Cryptopia, I don't remember that handle. That doesn't necessarily mean I didn't see it, but I don't remember that one. But this other guy that they mentioned that was his friend, or that also co-founded the business, I had multiple conversations with him. He was like the biggest poster on the forum, actually. He used to give people advice and kinds of things. So it was kind of weird watching that documentary for me. But in the end, I think he died, to be honest. I don't think there's some major, but I think people that lost money want some hope that they may recover it. And the hope obviously is he's alive. And I don't think he is.
So how do exchanges now prevent those type of things from happening? I mean, it's hard for me to believe that he was the only one that held the keys to $250 million worth of crypto.
Yeah. I think that the much more plausible story is probably he wasn't the only one with the keys. He did die, and whoever else has access to the keys is just trying to make it seem like they don't have access to the keys. That seems much more plausible to me. Well, one, like every business, it's about planning and it's about structure. When you see, I think to start at the top, and as we are a centralized exchange, we have pieces of our ecosystem, I would say, that are a bit hybrid. So, giving access to kind of decentralized finance, but through a centralized gateway. And I'm not against, decentralization in any stretch of the imagination. In fact, I think it's amazing. I think it's one of the only things that makes this entire thing we're doing interesting. But having said that, I think there's a lot of narratives that float around that just are kind of mistruths in some way. So everybody in the room's probably heard "not your keys, not your crypto." Mm-hmm. And while that makes sense to a certain extent, and there's also people now on Twitter, if you put your money in your bank, it's not your money. And I know too much about regulation and how banks work to tell you that that's actually nonsense. But they're right in one way. When you put if you put $100 bill in your bank account, that $100 bill is no longer yours, right? But the bank has a debt to you of $100. So your money, in a sense, is still yours. The only difference is somebody took custody of it. And you're not going to get that same $100 bill back, right? It's not an NFT. It's not a non-fungible. It's fungible. It goes into a pot. You get somebody else's 100. That's it. But the not your keys, not your crypto thing is, most people that get into crypto, there's a learning curve to get into crypto that most crypto people don't necessarily get for most normal people. And that learning curve is massive. And that learning curve induces risk. Now, as an exchange, we spend lots of money, lots of time, lots of resource on making sure that, your assets and our assets are secure. We spend a lot of time and money making sure that we don't fall into that same idiotic place where, Kevin's in Mexico and gets, run off a road, and now you have no access to your money. So that means putting in place systems that offer different types of access to different individuals in the company, that require that 5, 6, 7 people actually have keys, but you need at least 3 or 4. They're time coded. They have to be, entered into force in a certain amount of time. We have multiple gateways that we've created to gain access to hot wallets, to warm wallets, to cold wallets. So there's no one person in our company that could, die tomorrow. That would mean you don't have access. Now, if we all got on the plane together, it's kind of like that, the president and vice president never travel on the same plane. Well, same thing here. When we have events, we don't have everybody with keys at that event. There's always 3 people that don't show up to any event we hold or anything. And that's for the same reason. You never know what's going to happen. You want to make sure people have access. And so, as a business, we obviously can spend much more resource than an individual can. And the issue with not your keys, not your crypto is it's telling people that don't necessarily understand the technology to take the weight of understanding the technology on their shoulders. And I know, personally, I know more people that have been phished or spear phished, meaning they have a Ledger wallet or something, or just a wallet online, and they end up going to a fake website, or they give that website their 24-word, key phrase, or they end up putting their private key into some fake website and they lose all their crypto. And I know people that are actually crypto nerds that this has happened to. I mean, many. And I'm talking millions and millions and millions of dollars worth of stolen crypto. The difference there is that when you get phished, there's no one to complain to. That crypto's gone. Unless you're intricately tied into the market and you can get on Telegram and find the compliance people that work at multiple exchanges and send them a message and say, here, there's the wallet address. And in the off chance they try to move the crypto through that wallet or through that exchange, you might have a shot at getting it back. Obviously, most people don't have that access. So you lost that money, it's gone. If you're on a regulated exchange, especially one that kind of tries to do everything they can to play by the book, and that exchange is hacked, well, that exchange has 2 choices. They either give up, which means they lose their business, they lose their credibility, they're probably never going to be able to do anything else in the crypto space, that's for sure. Maybe even in traditional finance, because once your name's attached to something like that, it becomes very difficult. Or they do everything they can to recoup and get you your money back. That's the stark difference between, I lost my Ledger wallet versus, my crypto exchange got hacked. And you can see, obviously there's bad players in this market and there's bad players in every market. So not everybody's the same. But even big players, you can see there's been hacks at pretty much every exchange you can imagine. And for the most part, those that want to keep their client base, even if they're not regulated, have recouped assets for clients in almost every occasion. Now, when you look at DeFi hacks, so like, bridges, there's only been 2 cases of bridges that actually refunded clients. Everyone else left holding, no bag, basically.
So with CoinMetro, have you guys had any type of hacks, or you guys been around for what, 4 or 5 years?
Yeah, since 2017. So yeah, we in 2000, I think it was 19, if I'm not mistaken, October 5th, 2019, a day that'll live in infamy. We didn't have a traditional hack. What happened to us was we had just 2019. We were going through the bear market like everybody else, kind of just starting to get into some kind of motion of some positivity, and we started hiring again. So for a while we weren't hiring. We started hiring again. Got a bunch of new people, a bunch of new computers floating around. And one of those computers got hit with, we still don't really know the origin. In fact, we found out later that it was, I think, either tied to China, or I think it was China or Russia, one or the other. I don't remember. But it happened at like 15 or 20 different exchanges. So basically what these people did was they probably sent an email, something that seemed benign. We had a PDF in it, something like that. And it created an exploit on the computer. Now, at the time, we were still building out what we like to call our admin panel, which is kind of our system we built internally to control all our wallets, hot wallets, cold wallets. We don't control cold wallets, but control hot wallets, warm wallets, etc. All of our KYC, everything flows through the system. And it was in, it's not infancy, but it was a toddler at that point. So we had 2FA. We had all these different things built in. What we also had, though, was a VPN that we used, and the VPN was whitelisted to gain access into these systems. And so someone probably had infected multiple computers, but one individual had access to a few different pieces of the system that no one else did. And so this person basically sat there for months waiting and probably keylogging to see what this person was doing on their computer. Anyway, they got into the system. They were able to get into the system, bypass the 2FA with this whitelisted VPN. And they were able to create user accounts, fund them with basically fake money, and withdraw the funds. And it took about 30 minutes for us to catch this person, what they were doing, and we locked it. And in that time, I think they ended up getting about somewhere between $300,000 and $400,000 worth of crypto removed off the platform. Well, it wasn't. Well, it was fake crypto that became real crypto when they withdrew it. And so 30 minutes in, we spotted it. From then on, it took about 2 months. We did a major overhaul of the system. We now have what I like to call 5FA. There's no whitelisted IP addresses anymore. That's literally 2FA into a VPN system, 2FA into that VPN into our admin panel system, and then 6I rule on every single movement of money. And no single person in the company has access to more than one system. Meaning you can't, if you may have access in compliance to create a user account, but you can't add funds to it. That's a whole nother department. And you may have access to put funds on an account, in the case that there's an issue with the system, but you can't actually authorize withdrawals. So anyway, we did this complete overhaul. And yeah, we recouped every client, every one of those 300,000 or 400,000, US dollars worth of crypto was recouped by the company, and we made everybody whole. So
nice. So how many coins do you guys carry on CoinMetro? How many tokens, different types of tokens?
We recently went through a bit of a listing blitz, for us at least. Previously, we had about 30 different assets on the platform, including majors, meaning Bitcoin, Ethereum, XRP, the kind of majors in crypto, Litecoin. Now we have, I'm going to say, and Tom might even know better than me, but I think we have something like 44, 45, 50. We're closing in on 50. And I think by probably the end of the summer, we'll be above 50 assets. But again, like I said, our due diligence process is extensive. So that's why we'll never be the company that lists 1,000 assets. Never going to happen. But we will be the company that lists assets that the majority do well over time. I think that's something much better to be known for in the long run.
So what's the next 3-5 years? What's the goal for CoinMetro? Are you guys going to have Yankee Stadium names, or what are we looking at for you guys?
No. Yeah. We're not going to be naming any stadiums. You can this is recorded, so you can bring this back up in 10 years. There will be no stadiums named CoinMetro. I guarantee you that. Doesn't matter how big we grow. So for us, I think in many ways we're kind of the anti-exchange, given the fact that a lot of the way we do our business is kind of polar opposite to many of our competitors. I think, and I explained it a bit earlier, I think the next 3 or 5 years, obviously we're going to continue to hunt for licensing. I like to say that it's much easier to change something from the inside than the outside. And the simple reason is that when you're inside, you need to change the mind of one person, the right person, but one person. When you're on the outside, meaning unregulated or trying to evade, you need to change the minds of basically everybody. And that job is not easy. And so we've always been kind of pro-regulation in that sense. That doesn't mean we like every regulation. That doesn't mean we're thumbs up at everything legislators are doing and regulators are doing. But you can't change how things are done. You're never going to get to a better place if you're not inside. So right now we have licenses in Estonia. We have registrations in the US, Australia, Canada. And we're going after registrations now in the UK, licensing in the Netherlands. We are now part of a sandbox in Dubai from the Virtual Asset Regulatory Authority, along with 40 other crypto companies to help them create their regulation for the Middle East and potentially some of MENA, so Middle East and North Africa. We're all about getting in on the ground floor with regulation, so we will continue to do that. We will continue to look for regulation and help regulators make regulation smarter. And actually create regulation, or not, well, legislators to create regulation and regulators to regulate that actually helps people from losing money. Doesn't what it does now, which is restrict them from opportunity. And restricting someone from opportunity that goes wrong is not risk aversion. No, it's actually the opposite, because you're also restricting people from opportunities that go quite well. And so regulation is going to be a big part of it. I think you'll probably see a few more offices for CoinMetro in key places around the world so that we can continue to service clients and maintain our 4.8 Trustpilot rating, which is the best in crypto. We don't want to lose that. We want to be the guys that, that people go, the support is amazing. And we'll continue to strive to do that. But yeah, you won't see CoinMetro.com or whatever stadiums. You're not going to see us do Super Bowl ads. That doesn't mean we don't advertise. That's Tom can talk about that for all day. We definitely do, but we're a different kind of company. Simple as that. It's about, I'd rather be, I guess, kind of in many ways a combination of the Amazon and Apple of crypto, meaning that on the Apple side, we don't need to be first. We just want to make sure that the experience is better. So we'll let other people be first to make sure we see what's wrong and then try to build something better and maybe prettier. I don't know. And then at the end of the day, a little bit like Amazon, because Amazon's goal was to lower prices as they got bigger, basically make less money on every transaction as you grow bigger to try and keep the client happy. And I think we're very much in that same realm. And it's not just about pricing, but it's just about that. Again, you put the client first, really put the client first. That may mean for your first 10 years of life, you don't make money as a business. That's fine. Putting the client first means you're also putting your investors first. You're also making sure that everybody gets what they need. And in the end, the business does fantastic. So that's kind of, so I think in the next, 5-10 years, I think we definitely will be doing well as a business, but I think our clients will be doing even better.
Great. So you guys do an AMA every Friday? I think I saw one of your AMAs. So every Friday you kind of just, you're on Facebook Live or whatever platform. You talk a little bit about what's going on in the industry and also within your own company.
Absolutely, yeah. It's an actual AMA. So whatever someone asks, I answer. Sometimes I get some really weird questions, but it's fun. And so yeah, every Friday it's at 3 p.m. Estonian time, which is roughly 7 a.m. Here Central Time. So people might have to watch it recorded, but yeah, every Friday. I do travel a lot, so there's one occasion where I'm on a plane or something, and usually I try to catch up on a Saturday or Sunday. But yeah, usually without fail, every Friday, people can ask me anything, whether it's about finance in general, whether it's about crypto, whether it's about CoinMetro, can be about literally anything. And I don't think I've been stumped yet by a question. I've definitely had questions that I was like, I'm not answering this one for whatever reason, but yeah. But I don't think I've gotten one that stumped me yet. So
no financial advice, but where do you see Bitcoin at in the next 6 months to 5 years?
Yeah, well, 5 years in Bitcoin is 80 years in general financial terms. So, I do think we're still going to see a ranging market. I'm not so sure the bottom's in yet. When you've been in markets as long as I have, you realize that there is a pattern. I'm not talking about a chart pattern. I used to teach people how to trade, and I teach people how to trade a naked chart. I don't care if it's a bar chart, a line chart. You can pick whatever chart you want out of the bag. Doesn't matter. But no indicators, no MACD, no stochastics, no oscillators, no moving averages, just a naked chart. And the thing is that markets are as the market becomes more institutional, because historically this has been a retail-driven market. It's been a hype-driven, retail-driven market. It is still hype-driven, but now it's hype-driven with smart money inside of the market. What smart money does is they know their wallet's bigger than yours. So they will play with your emotions as much as they can until you give up and they move on to the next guy. So normally when you see some type of rally like we're seeing right now, you should expect lower lows before you start to get on a higher trajectory. Considering fundamentals right now, it makes a lot of sense. Theoretically, fundamentals right now should be pushing people into something like crypto with its track record, especially Bitcoin. However, to understand a track record, you can't be a novice retail guy. You need to be at least a professional retail or a retail person, a retail trader that's been around for a few years, or at least understands more about market mechanics. But the big boys understand it. So I think we're going to see a relatively big range until now, but in the end of the year. Historically, Q4 has been positive for Bitcoin at every year except one. I think this will be the second. I don't expect to see a major rally in Q4, but I do think we're going to see an expanding range. So that could mean we're higher in Q4 than we are now, but I would not eliminate the fact that we may still see a lower low. There still needs to be a lot of accumulation. It's obvious that big players aren't buying at these prices because price would have already escalated, another 30, 40, 50% higher. It hasn't, which means it's small money buying and big money selling. And so I would still expect to see that pattern. I think probably going into Q4, into Q1, Q2 next year, you're going to see a slightly different fundamental outlook, especially going through, getting closer to midterms and all that great stuff in the U.S. That's gonna add potentially some certainty to the market. Markets don't like uncertainty, and lots of things in the world right now are uncertain. And that's going to lead the SPX and then Dow and all that stuff down, and Bitcoin will follow inevitably.
Yeah, you would have been great at Tone Vase's event. They talked a lot about this. at his financial summit. But one thing that they talked a lot about was hedging. A lot of folks, especially in the mining space, they didn't hedge, right? So they're being affected today. So with us, crypto world being in the mining space, that's one of the takeaways I got was just some strategies and hedging. So the bitcoins that are
you got to be careful with hedging though, because hedging is literally a two-edged sword. When I used to teach trading, I remember a student named William. I'll never forget this guy. Everything I taught him, he was like, no, he kept telling me he had a better way. I said, I don't know why you're coming to these classes then, stop paying me money. I mean, because obviously, it doesn't make any sense. And so his strategy was that he would just constantly hedge, and then he would jump out of the position, when he saw fit. And I said, well, you understand that that's no different than just buying at a bottom and selling at a top. There's literally no difference. You're not taking any less risk. No, because with hedging, there's no risk. I'm like, okay. And yeah, obviously he blew up more than one account in a very short amount of time trying to hedge. So hedging is a good thing, obviously, and it's a tool that even Walmart uses. I mean, Walmart constantly hedges because they need to make sure that when they're sending products and buying products overseas in different currencies, that they're not getting screwed on exchange rates. But it's normally a corporate tactic for transfer pricing more than it is a trading tactic. And so you have to be very careful with hedging because it seems like a no-brainer. But what happens is if you're not confident enough about the position you're in already and you get in two positions, it's not going to change anything. But what you say is very commercial. So with miners, the goal with miners is you take some type of leverage position to hedge just in case your cost of mining goes above the price of Bitcoin. And that's a much different thing. But for traders out there, you gotta be very careful with hedging. For something like mining, as long as you just need to make sure that you continue to mine. And if you're spending more than the price of Bitcoin, you're going to have to stop mining. But if you're hedged, then you're making some profit on the hedge. It enables you to continue to go, and that's the difference. So that's a commercial trade versus just hedging for the sake of it.
Does CoinMetro, are they involved in the mining aspect?
Currently, no. I was involved in mining through my kind of transition from, mining as in just, having like literally the original Bitcoin miner software with the entire blockchain on my iMac. And then I got into mining a little bit. Actually, before I launched CoinMetro, the idea I still have the website, I think, still have the domain name. It's miningco.in, mining coin. And that was going to be, I wanted to create the first cloud mining company where people could buy small amounts of mining power. So, but anyway, that never happened, didn't come to fruition. CoinMetro right now isn't involved in mining. We do have a play right now that we're talking about with a couple of our investors in Texas to potentially get involved in a bit of mining. And we have this system on CoinMetro called MARS, multi-asset rewards. Basically, we have our own token, XCM. People buy our token and they stake it. They get a certain APR or APY, up to 5% per year. But on top of that, we give away some of the revenue, a majority of the revenue that we earn on every other passive income staking program that we offer to clients. Obviously, we pay a little less than we make. We make a bit of money. We pay the majority of that back in these Mars rewards. So when someone stakes one asset, being our token, they can actually get multiple tokens in turn for just staking one. And one of the goals for us is to add different types of rewards to that Mars program. And one of those, we hope, will be mining rewards. So the company will control some miners, some nodes, whatever, and off of the rewards that we receive or the mining rewards we receive, we will repatriate those back to XCM stakers. So we're currently investigating the play, but I think, maybe end of year, we might see something come to fruition, but we'll see.
You think Ethereum will go proof of stake here as planned in the next couple months?
Well, I mean, if you judge by history, no. But, at some point they're going to pull the trigger, whether it's now or in the future. I got to believe that, to be honest, that thing's been priced in every time Ethereum has hit an all-time high, POS was priced in, except the original all-time high because they weren't talking about it. But in the last 2 years, literally every time that's been priced in already. I think I'm kind of, proof of stake to me is a little bit, it's good and bad. If you think about the original Bitcoin white paper, the whole idea was to create a system that wasn't that the massive amount, the power wasn't kind of situated with a small amount of individuals, so that the equity and the wealth was distributed. Well, that didn't work, because obviously the 1% when Bitcoin, for example, is much lower, as much smaller amount of people than the 1% even in the real world. So they kind of failed. That failed. That didn't fail because of Bitcoin. It failed because people are greedy, and people with money have money, and they have more money than people without money. So eventually they buy more than people without money. I mean, it's basic math. But proof of stake also goes kind of right in the face of that type of the Bitcoin white paper, in a sense that it's, the idea of proof of stake means you own more, you have more power, and you make, and that, I'm not saying that's necessarily a bad thing. It's capitalism, fine, but I'm not sure, and it's not as secure in many ways. I don't know. I think they're going to do it. Obviously, they're going to do it. I think it will have probably a negative impact initially. I think it's going to be one of those of buy the news, sell the fact. So when it does happen, I think there will be a negative reaction, a knee-jerk negative reaction initially. And then over time, Ethereum will go back to gaining momentum, just like it would have without proof of stake. From a business standpoint, if you have a product, let's say gas fees were essentially, how they make money, right? So if you have a product that someone's willing to pay $1,000 for, and then it's priced at $1, and I'm saying for the public, I'll put on my business hat now, not I like to be the good guy, but from a business standpoint, if it works at 1,000 and you lower it to 1, that's not necessarily going to be good for business in the long run. Ethereum had value because, well, it was expensive to use. To be honest, there is a correlation, 100%. It's not so much about on the obvious fact that there's a lot of people using that network, but the fact that a lot of people use the network raises the price, and people still pay that price. Price of Ethereum goes higher. And so I'm not sure what proof of stake and lower fees over time are actually going to do to that network, especially with so many other competitors coming into the space that offer something similar and or better. So I don't know. It's going to be interesting, because unlike Bitcoin has this following of either it's a currency or it's a store of wealth, right? Those are the two major arguments for Bitcoin. Not many people use Bitcoin as a protocol to build on. Yes, there's Lightning Network. Yes, there's other things, but in reality, Bitcoin's there as a store of value or as a currency, one or the other, whichever camp you may be in. Ethereum, however, is a protocol to build on. And at some point, when another protocol comes along that makes more sense to build on, the question is, what does Ethereum become? Is there enough support in Ethereum for that for that to be a source of value or a currency? I'm not so sure, because that narrative really hasn't been pushed. That narrative really has been about the protocol itself, not so much about, what Ethereum is, in contrast to Bitcoin.
I don't know if the audience has any questions. I don't want to. I'm asking all the questions, but if you guys have questions, speak up. But
I got a question.
Yeah, go ahead.
So I'm relatively new in crypto, and I got a Coinbase account. Started with Coinbase, and then I was leaving my Bitcoin on exchange. Then the CEO came out and said, "Hey, if something happens to us, just become a creditor and keep it." I don't know about the cash waiting for ACH cash over and then make a $5 grand a week or whatever. But how does your company handle that? Is cash in the account backed by federal government or something like that, or how does that work?
So we for ACH transfers, we use a trust company regulated in the U.S. called Prime Trust. So Prime Trust operates multiple bank accounts, trust accounts in multiple banks in the U.S. So the difference is when you're an individual, obviously the FDIC covers you to I think 250,000, I think the limit is now. Whereas when you're a business, you don't get additional coverage. So the bad part about using any type of intermediary is that if something were to happen where the bank where the funds are, then there's the FDIC doesn't cover individuals. At least historically, they haven't covered individuals. Whether or not that, depending on, I guess if Bank of America were to go under, the big bank or something, that may change. In fact, but it may bankrupt the FDIC. So, that question's hard to answer. The simple answer is FDIC insurance at the bank level doesn't necessarily cover pooled accounts. From our side, when we receive, when you do an ACH to us, you get the funds in your CoinMetro account instantly. For us, however, we wait 5 days for those funds to clear into basically a sub account owned by you at the trust company. We don't even have access to that money until you make a trade. If you buy Bitcoin, what happens then is that obviously you get the Bitcoin and the funds go from your sub account at that trust company to our pooled account. But at that point, you already have your Bitcoin. So in a sense, if something were to happen before you were able to acquire that Bitcoin, I believe FDIC insurance would cover you because you're not yet in a pooled account. You literally have a sub account in your name that's only your funds sitting inside of that trust company. That sits obviously inside a regulated bank in the US. When it comes to just insurance in general, we work with Fireblocks and BitGo, which are two of the major custodians in crypto. So most exchanges use some form of custodian, whether it be those two that I mentioned or a few others. They're both insured. One, I think, has insurance up to 500 million. I believe the other one's maybe 250 million, something like that. It's specific insurance. As this industry matures, the type of insurance will also get less specific. So, for example, if you've ever bought life insurance, or you ever bought cheap life insurance, right? And like, I don't know, maybe you bought life insurance. You see life insurance for like $100 a month or whatever, $100 a year for a premium. And it says like, it only covers if, you get into a car accident, lose your right hand, your left arm gets stuck between a telephone pole, and I don't know, you lose your right shoe, and then, you're covered. Everything else though, forget it. And so crypto insurance started like that. Like literally, we only cover you if the key we hold on your behalf gets stolen, and then they use that key plus, whatever, something else now that's changed, and crypto insurance is a bit more broader, still not as broad as it should be. But in most instances where either our cold wallets were hit or our hot wallets were hit through that custodian would cover it by their insurance. So while we don't hold direct insurance for those type of transactions, we have insurance through this third-party custodian. So yeah, there is insurance on the ACH side. Like I said, before you make a purchase, if something were to happen at the bank that holds the funds, and I'd have to double check on this, so I can definitely get back to Jeff. But I'm 90% positive that FDIC would cover it because it is a sub account, meaning it's an individual account, not a pooled account, and it only goes into the pooled account once you make a purchase. And by then you already have crypto, so your fiat is no longer your fiat. Now you own crypto.
Does that answer your question? Yeah. Okay.
What do you think about Michael Saylor?
I think he's an absolute loon. So I met Michael Saylor in Bitcoin Miami just this past March, I think it was. I never met him before. I'd seen a few things he said. The thing is that I've seen interviews with Michael Saylor. There's one specifically, I think it might even be public now, where he kind of discusses very openly his true feelings about the crypto market. But when he goes on, CNN or whatever, he just sounds like a crazy person, to be honest. I mean, and I'm not sure he's crafted that narrative on purpose. And I'm not really sure it's good for the industry. As a whole, I think he's terrible for crypto. I think, him supporting Bitcoin is not even all that great. I mean, to be honest, if you were to sell all this Bitcoin tomorrow, the market would go down by $180 and jump right back up. The market doesn't care. And so had Michael Saylor been in the market when Bitcoin was $100, that'd have been amazing, because he would have pushed price all by himself up to who knows where, and it would have been amazing for the market. Right now, he doesn't matter, and I think there's too much emphasis to say that he does matter. He doesn't matter. For the whole is crypto. Look, for crypto to succeed and for Bitcoin to exceed, it's an industry now. It's not just Bitcoin and shitcoins. It is an industry. Like it or not, that is how the industry works. As the industry grows and Bitcoin loses its hold on, let's say, 70% of the market, now maybe 30% market share, 40%, it's inevitable that as the market grows, Bitcoin will become a smaller market share, but also grow market cap, right? So when the market cap of Bitcoin is 10 trillion, it's not going to own 70% of the market. It's going to own 20, 25. And as that happens, as the market matures, that means that so goes shitcoin, so goes Bitcoin. There is going to be, regulatory push that's going to include the entirety of the market. And so Saylor goes out and just says, everything else should be classified as securities. It's all shit. And Bitcoin's the only one that should survive. the problem with that theory is that one of the only reasons that Bitcoin is at the price it's at is because of Tether, because they just create Tether out of thin air. You can literally go through. I have a chart somewhere. I'd share it with you if I could, but it's probably I wouldn't be able to find it in time. If you look at every single bull run for Bitcoin since Tether's been established, you will see massive amounts of Tether printed, and it goes to 3 different exchanges: Bitfinex, Binance, and Huobi. Only those 3. And then automatically within 24 hours, Bitcoin's up 10, 20, 30%, like clockwork every time. So, and that's just one, that's a stable coin, but still, according to Michael Saylor, it's all shit. It should all just be, stopped, but Bitcoin should remain. And it's just a terrible narrative. And really for the market in general, because you have to understand that who hears that narrative is not just new crypto people. It's also regulators and legislators that think, Bitcoin and Dogecoin and Shiba Inu are the same thing. And so when that narrative goes out, he's basically telling those regulators, this market's full of scams, but this one's okay. And that's not a narrative that ever works. So I wish he would just stop. Like I wish he would just sell his Bitcoin tomorrow and walk off a short, take a long walk off a short period, to be honest. I think it would be better for the industry as a whole. Wrong guy with the sunrise.
Yeah. I saw that he stepped down as CEO, and there's a lot of kind of rumors going around.
Oh, he got kicked out for sure. He got kicked out for sure. The thing is that, the idea that, one guy really so Michael Saylor likes Bitcoin. We all know that, pat on the back. Great job, boy. Whatever. Right. Great. But he has a fiduciary responsibility to shareholders as CEO. And he spent billions of dollars on a risk asset that's currently down $1 billion on his purchase price. He's out. I mean, that's it. You don't stay as CEO of a company that has nothing to do with the industry you're investing in. Literally, he took shareholders' money and put it into a risk asset, probably with most of them not understanding the risk. And so, yeah, he's out. That's why he's out. He didn't step down. He got kicked out for sure. I mean, they obviously don't want to say that because it potentially now the problem with his shareholders who he was fiduciary responsible for, they are at least smart enough to know that if they berate him so much, then it might affect Bitcoin price, and that just screws them. So I guarantee you, though, once they're able to exit that position with profit, he's out. They will fire him entirely. He's gone. No longer will be at MicroStrategy. He has to get fired. Fiduciary speaking, he's an idiot. I mean, there's no other way to say it. Look, I'm a crypto guy. I own Bitcoin. My company owns Bitcoin. But in no way, shape, or form would I put such a substantial portion in risk assets for a company that has shareholders. It's just, it's a bad move. Whether it goes up or down is meaningless. It's just, it's a trust issue, I think.
I had a question. The SEC said that they're coming after exchanges. Do you think that's just a scare tactic, or
I don't think it's a scare tactic. I think the problem with the current problem with U.S. regulation is that the CFTC, the SEC, are fighting to try and take hold of the market. The problem is that the CFTC themselves have come out and say that basically nothing's a commodity. They've said publicly once or twice that Bitcoin potentially could be a commodity, but there's no specific verbiage from the CFTC stating that anything is a commodity. SEC is basically saying then that everything is a security, which it's not. I think, I had a really cool conversation at Bitcoin Miami with a lawyer that I know, that I've sat on different panels with in the past, and we've, crossed paths, different events. Very, very high profile attorney from New York, has been in like finance law for 25, 30 years. Now is actually the head of legal for the Cardano, basically. And we sat down and chatted, and he's intimately involved with Loomis and these 2 different senators trying to build out regulation. And, he told me, look, these first 2 bills aren't going to pass. This one, the next one, not going to pass at all. We don't even expect them to pass. In fact, even if they do pass, they're going to get completely annihilated after they pass. But the goal for that group, actually, at least the crypto-minded smart people in the room, is that the FTC will regulate all assets that are considered non-securities. That would mean Bitcoin, potentially Ethereum, and all, let's say, non-security tokens, which would be anything that considered to be utility. The thing about that, the amazing thing about that from a regulatory standpoint, is that under the FTC, what would happen is that these would be treated as products. So you would have to have disclaimers. You would have to tell people what they're what they're buying. But at the end of the day, if something happens, they have a place to go complain. They can go to the FTC. They can go to basically like something almost like the Better Business Bureau, right, and complain. The FTC has the power to sanction and all those great things, but it removes all the onerous regulation of how these can be traded, how they can be moved between parties, who can buy them, who can sell them. It opens it up to the entire retail public. Doesn't matter what it is, and everybody can trade them. That's the end goal for the group. Immediately, they say it's going to take 2 to 3 years to get even close to that end goal. And through that time, there's going to be a lot of bad bills that are drafted, but that's the end goal. And I think that's amazing. And I do think the SEC will go after, that's their job. And there's definitely people they should go after for sure. I think the good thing about US regulators is that in contrast to many other countries, they do have enough people and some astute people that actually understand the industry that they're trying to regulate. Not everybody in the SEC understands, that's for sure, just like not everybody in the CFTC understands, but they do have smart people. And so I don't think it's an idle threat, but I also don't think it's a blanket threat. Like I read somewhere, I think someone said, I saw it on Twitter, basically somebody who used to work for the SEC or maybe still does, but isn't an enforcer, that said that every U.S. exchange is being investigated. And I think that's an overstep. I don't think that's true. I think every U.S. exchange probably has a jacket, a folder somewhere, for sure. Simply because from an insider perspective, I can tell you that the biggest problem right now with exchanges, one of the biggest issues, is what's called second-party fraud. So there's a ton of criminals out there that are creating nonsense BS investment websites, and they're using companies like Coinbase, like CoinMetro, and telling their clients, look, you can invest with us, you get a guaranteed 100% return, but you're going to onboard through our regulated counterparty that's going to verify your identity to make sure that everything's legitimate. And they walk the client through the onboarding, get them to fund the account. They get access to the account because they make the client use a company email and a company cell phone to register the account, and they basically drain the person's bank account through some regulated exchange, and then tell the client that they've made 300%, and to get it out, they just have to prepay the tax, and the client sends some more money, etc. This is running rampant right now. We see dozens of these attacks almost on a daily basis. Coinbase, Binance, they all see them. And I think the reason why there's a bit more of a regulatory push is, one, because of that, lots of second-party fraud going through crypto right now. And second to that is the Ukraine-Russia conflict war. And the reason for that is that it's heightened the sensibilities of all regulators to clamp down on unauthorized movement of funds. And so that includes not only it's FinCEN, it's SEC, and it's the CFTC. And in that aspect, they're all working together. So all those agencies are working together to try and stop the unauthorized movement of funds. So yeah, I don't think it's idle, but I don't think it's blanket either. I wouldn't expect 50 investigations, but I would expect you're going to see some well-known players get into some legal issues over the next 6 to 12 months. It was inevitable 5 years ago. It just takes time.
So Kevin, I know we probably have room for one more question. Anybody out there? But if you guys, is there for your AMAs? How do we get to it? Is there a link?
Sure. Yeah, well, we can definitely supply a link. And Tom's in the room with you guys, so he can literally show you. But CoinMetro.com is the website. If you go to YouTube and search CoinMetro, you'll find our YouTube channel, and that's where you can find the AMAs. Also on our Twitter, which is at CoinMetro. We also broadcast them on Facebook. We also broadcast them on Twitch, I believe. I don't think anybody in the room probably watch. I don't even, to be honest, I've never seen anything. I don't even know what Twitch is. I just know gamers go there to watch other guys gaming and talk about it. Not my thing. But anyway, we're on Twitch as well, if anybody out there is on Twitch. And so, but yeah, just search CoinMetro over on YouTube. You'll find us. You can also find us on, like I said, on Twitter. We stream there as well. What you see in my little name here, at Kevin Murcko, that is my name, but it's also my handle on Telegram, my handle on Twitter, and you can find me there. We also broadcast the AMAs on my personal Twitter as well.
Nice. Well, Kevin, we appreciate you taking the time to speak to us and also the audience. We look forward to working with you as Crypto World expands to multiple locations. But very excited, and let's touch base and hopefully have you speak more on some of our events.
Absolutely, would love to. Love to come by, and maybe in person one of these days. Since at least in the beginning of next year, I will be in Mexico for a 6-month stretch. So quite easy to fly into the States, go visit with Tom, and stop by Crypto World. Why not? But yeah, good luck with all the new openings. Can't wait to move the partnership forward and help you guys get people into this crazy market we all love. And yeah, till next time. Thanks everybody. Thanks for the questions, and chat soon.
Thank you.